Business news now, and yesterday we told you how Italy rocked financial markets by imposing a hefty windfall tax on the country's banks. That policy lasted a mere 24 hours. In a whiplash-inducing U-turn, the government reversed that decision, dramatically scaling back the proposed levy on financial institutions. Yet other countries in Europe, including Spain and Hungary, are sticking with the policy, and governments in other countries are facing calls to ensure that profitable banks do their part in easing the cost of living crisis. Now, to discuss that and other business headlines of the day, let's cross over to London, where Arise business correspondent Laurie Laird is standing by. Laurie, good to see you, and thanks as always. What a U-turn out of Italy. What's the reason behind the reversal?
This isn't just a U-turn. This is a screeching U-turn. You can see the skid marks on the road. And honestly, just 24 hours after rocking the markets, Italy saying we are going to a rate of 40% tax on banks' excess profits. Less than 24 hours, it was gone. There is still going to be a levy, but it'll be much, much smaller. There's one reason for this. It was because the announcement unsettled the market so much. Italian banks, most of which are listed on the stock exchange, lost to 10 billion in market value after this announcement, because investors think, why would we hold Italian banks? They're not going to be as profitable because they have to hand so much money over to the government. Not only that, if there is a problem down the road and the Italian economy is contracting, that tends to non-performing loans. So the investors are worried that the profits that may have been put aside for these banks to cover any problems going forward were going to be taken by the government. So I think the government saw this complete collapse of Italian banking shares and said, wait a second, this didn't go so well.
Could banking levies help ease the cost of living crisis?
To a certain extent, look, if the levies that are being collected by governments, and other governments have tried to do this, Hungary is doing it, Slovakia, Poland has, even the UK is discussing it. The opposition Labour Party, which could well be in power in 18 months, is also, some of these MPs are discussing it, although the party leadership at the moment is saying, we're not interested in this. If this money that the banks were going to pay goes into helping people who are struggling with the cost of living crisis, yes, it could help on the margins. However, you've got to remember that when interest rates were very, very low, these banks were not very profitable. And in fact, Italian banks have only been in the black for a very short period of time. They really struggled after the financial crisis. I think it's more concerning over the longer term. Economies hit the rocks, that these banks will not have enough money to cover these potential non-performing loans that I mentioned. So in the short term, it could be helpful on the margin. On the long term, I'm not sure that it is very helpful. I mean, it's very important for every country to have a well-performing, well-regulated, reliable banking sector.
All right, let's leave Europe for a bit and see what's happening in Asia, specifically China. Yet another set of poor economic results.
Yeah, this is quite staggering. China's consumer price index, that's the an aggregate of prices paid in the economy, actually fell year-on-year terms by 0.3% in the month of July. Producer prices, which are essentially wholesale prices, these are the prices of things after they come out of the factory, but before they get onto the shelves that we're seeing in these pictures now, they fell by an annual rate of 4%, which is an astoundingly big fall. Now, I know it sounds like falling prices should be a good thing, right? Who doesn't like things getting cheaper? But in aggregate, in a large economy, falling prices become a problem, because if you think that prices are going to fall, you're not going to spend your money today. So if you're looking a car, an expensive purchase, and you think I'd like that car, but prices are falling, you're going to wait before you make that purchase. Businesses will wait before they put investment into things. So it really has an effect of gumming up an economy. It also shows that the Chinese economy is not recovering particularly lockdowns. Shows that demand is not very high. People are not wanting to spend money, and that is concerning for an economy that is as big as China's.
Let's quickly touch, something in the U.S. We understand that the regional banks have been downgraded.
That's right. Moody's is regional banks, smaller banks, but it also has looked at some of the bigger banks and put them on negative watch. That means a downgrade could be coming. There are a couple of reasons for this. One is that these banks are sitting on big holdings of U.S. Treasury bonds. These Treasury bonds have fallen in value over the past months. And it means that if these banks hold these treasury bonds, which are meant to be safe investments, if they hold them to maturity, they will lose money. It doesn't look good on a bank's balance sheet. And that is what Moody's says they're worried about. They also mentioned, and to my mind, this is perhaps a bigger problem. It's something I've been harping on about for some of these regional banks are also exposed to loans to commercial property, particularly office buildings. The problem is in the US, a lot of people aren't going into offices anymore. Companies are sitting on more office space than potentially they need. It means that rents may not be forthcoming, particularly with interest rates going higher. And I think the commercial property could be incredibly problematic in the months to come.
Laurie, Laird, many thanks.